Hey, Workday reporting folk. Today we're going to have a quick video tutorial on intercompany. What we have here is Global Model Services has received a supplier invoice for the following amount, 15,000. It's posted that into various for expenses for facilities expense to these cost centers and to these reasons. To these different regions, right? So Eastern, Western, it's rent, right? So it's a rent posting. And so that's all fine. And here comes the first thing is intercompany receivable. There's facilities and another receivable. Now what's happened here, you posted it to a facility, you posted it to another company, right? Part of this expense. And that part of the expense that you can see over here, it's been posted to Prestige Worldwide to facilities, different areas here, different work tags. And that's created your intercompany payable and your intercompany receivable. Right? So there's the journal. When you have a look at how this ends up in a financial report, now this report over here purely has, year-to-date eliminations and eliminated balance. Please note I have restricted to those two journals. And we open up, so now we should see our postings here. So under total assets, so we have current assets. We have that receivable, that 3.5 receivable, and then under liabilities and equity, we're expecting to see that payable, the normal accounts payable, right? And then the intercompany payable. And then on the net income side, we're expecting to see, and if you drill down, open up, the net income and the total expenses. We have that facilities expense, which we will have a look at. So here's your facilities expense. Now if you drill down by company, you see it's been posted into those two different companies, right? That's the Prestige Worldwide posting, and that's what's called created the intercompany payable and receivable. Cool, all right. So now just what's controlled is this intercompany payable, intercompany receivable accounts that is done by maintain elimination rules. Here under intercompany into work tag, your intercompany payable and receivables are being posted by these two accounts, and if there's any deltas, it goes into the suspense account. So these rules essentially determine which journal or which ledger accounts are used for the intercompany payable intercompany postings. Now, all right, and then here, right? So this is your standard. Here's your eliminations, right? So it eliminates the intercompany receivable and intercompany payable. Here's the eliminated entry, and here's your eliminated balance. And so really very quick elimination intercompany eliminations that you're able to do. Now, how is this report written? Clearly composed reports with a couple of columns based on a matrix sub-report that is running on journal lines for financial reporting. So if you have a look here, so this is your standard stuff, right? Your control field being the ledger account. So you have a ledger account control field with the outline structure, right? And here's your lookup data row that renders the data by that account structure, right? So you guys know composite reporting, right? That does this piece over here. And then now the first data column is done by the definition, is data column definition. And as you guys have seen, it's a sub-report. Here are the prompts of it, right? So I've got the journal prompt, company, etc. Just note here, eliminations only and perform intercompany elimination, which is the standard prompts that come from that data source. It's do not, right? So basically not selected. If I look at this report over here, I will journal lines for financial reporting. It's the company data source filter, journal line. Here's the ledger account that's using the control. Yes, sum translated debit minus credit amount. Allows me to run it in currency. Now here, just interesting, I mean, on the drill down, what you certainly want to have company and intercompany affiliate here as a drill down, and company and intercompany affiliate in your detailed data. That's very useful when we're running this report, right? So if you were at the top here, total eliminations, and you drill this down by company, the one side, then you'll find the originating company, which would be GMS Canada, and you do the affiliate, right? Do the refresh over here. You see the affiliate against which that was posted now, why the elimination is happening. Obviously, this is obviously much more interesting. Here's your prestige worldwide Canada. If you have a huge elimination with multiple companies and you do these two drill downs, but then you can see the kind of the elimination grid that you're looking for. Obviously, if you click on this on the journal lines, you're now going to see the elimination entries, and you can see the company and intercompany affiliate for that total elimination entry. Okay, so that was just to explain the drill downs over here. And like I said, everything's pretty much standard over here in this column. I'm using the same sub-report here, but different settings, of course, for that elimination entry. So what you have here is perform intercompany eliminations and just show the eliminations. That's what the setting means. And so that just gives you those entries that's going to be eliminated. So obviously for value, I'm just going to zap it at this stage. And here, again, the same sub-report. And all that I have done, the settings over here is don't perform intercompany eliminations, but show just the, don't only show the eliminations. That's what that setting says it does for you. So yeah, same thing here. Yeah, that's a very quick high-level tutorial of intercompany eliminations.